Let's focus on TCRS. TCRS remains a people-proud organization, always striving to remain an employer of choice, specifically during trying times such as these. This year, TCRS was awarded a Silver Investors in People accreditation in the Health and Wellbeing category and the Outstanding Use of Technology category. This award highlights the initiatives implemented by TCRS to prioritize our people's health and well-being, and the use of smart technology to assist our employees. The Silver accreditation is only achieved by approximately 15% of assessed organizations globally. The SA macro and social economic environment is challenging, placing pressure on consumers who continue to be adversely impacted by COVID. In South Africa, there are 39.6 million adults, 26 of which are credit active, and 10 million, or 38% of these, are considered to be non-performing or in arrears. Surprisingly, this ratio has actually improved from 42% in December 2019. We also experienced elevated levels of unemployment at 34.4%, which is the highest in 12 years. Resulting from this adverse environment, overdue balances continue to increase. 63% of the lower income segment are in default. 88% of South African consumers indicate that household income continues to be negatively impacted by COVID, and 61% indicated that household finances haven't recovered to pre-COVID levels. Although the consumer credit sector remains under strain, credit activity has recovered to pre-COVID levels, with consumers benefiting from 5-decade low interest rates. Some positive factors include the cost of servicing debt improving to 7.7%, down from 9% in December 2020, and household debt to income improving to 75.2%, from 76% in 2020. Our own index, the Transaction Capital Consumer Credit Rehabilitation Index, shows that the distressed consumer's propensity to repay debt is deteriorating with weak economic conditions exacerbated by COVID. TCRS is well positioned in this context, and its business model has gained in relevance since COVID. TCRS's clients have larger NPL portfolios than ever before. Their balance sheets and operations are under pressure, and they are all trying to shift from fixed to variable cost structures. This, together with the consumer's impaired ability to service their debt, increases our clients' appetite to sell NPL portfolios or enter into outsourced collection arrangements. TCRS is strongly positioned to accelerate the acquisition of NPL portfolios and win agency collection mandates, specifically as regards our successfully established work-from-home capabilities, where we have more than 1,200 agents working from home at increased efficiency and productivity. In Australia, the consumer is employed but highly leveraged, with household debt to disposable income exceeding 200%. As government support programs terminate and banks cease debt moratoria programs, TCRS expects more NPL portfolios to become available for purchase or outsourced collection. Market dynamics for participants in this sector include reduced access to funding, increased regulatory compliance, lower sales of NPL portfolios and heightened competition, and a shift towards fee-for-service. Despite this environment, a small position in this large and fragmented Australian market provides a meaningful opportunity for TCRS to grow its agency and NPL acquisition business, where we currently have a very small market share. I will not talk to the slide, and you can go through it in your own time. All I wanted to emphasize is TCRS's unique technology, data analytics competencies, enabling intelligent digital business services. TCRS's diversified business model enables it to perform well in a positive and a negative environment. Firstly, TCRS has been realigned to deliver in 3 diversified business activities: collection services, transactional services, and business process outsourced services. Within its largest business activity, collection services, TCRS is a diversified revenue model, allowing TCRS to be defensive. Agency collections thrive in a positive consumer environment, whilst a negative consumer environment is conducive for the acquisition of NPL portfolios. TCRS is further diversified across geographies, sectors, clients, mandates, and even individual consumer accounts. This all positions TCRS defensively, and in a very difficult year, TCRS was able to grow revenue from collection services by 8%, an excellent result given the difficult consumer environment heightened further by COVID. This slide shows that investment activity and collection performance have both been excellent. Our 1.2 billion investment into NPL portfolios has normalized at 2019 investment levels. Our asset base, or carrying value of acquired NPL portfolios, at 3.4 billion is 37% above 2020 levels. This has driven principal collection revenue up 24% in total. Looking forward, expected remaining collections have grown by 23% to 6.4 billion, supporting strong annuity cash flows and predictable growth in the future. It's important to understand that TCRS has the ability to adjust its pricing methodology to the prevailing environment. This ensures that future NPL portfolios are priced with the environment in mind to achieve targeted returns and collection multiples. TCRS's operational and financial performance was excellent. Pre-provision profit increased 17% to 729 million rand and is 34% above 2019 levels. Headline earnings increased 662% to 320 million rand and is 15% above 2019 levels. This was driven by non-interest revenue increasing by 4% and core operating costs reducing by 16%. The cost-to-income ratio improved to 80.6%, driven by the proactive restructuring of TCRS's staff complement and infrastructure during 2020. This included the implementation of highly effective work-from-home capabilities, with more than 1,200 agents working from home at increased efficiency and productivity, and has allowed TCRS to continue to write down the carrying value of purchase book debts at elevated rates, protecting the balance sheet and future earnings. Looking forward, TCRS is well positioned to capture emerging opportunities. As I said, the division is structured to deliver in three key areas: collection services, transactional services, and business outsourced process services. Within collection services, we expect accelerated acquisitions of NPL portfolios as sector dynamics in South Africa and Australia become clearer and return to pre-COVID levels of activity. And a small position in the Australian and other international markets provides a meaningful growth opportunity. Within transactional services, we continue to build a more resilient and efficient payment and transactional processes platform. And within our business outsourced services division, we are leveraging our low-cost rand-denominated resources and technology stack and data and analytical capabilities to drive local, but more importantly, global growth.